Let me bring in Kunal Bothra. First, on the index, Kunal, good morning. Give us a sense, where do we stand this morning and through this week? Where is it that you see the index go?
Good morning. So, the last 7 days we've seen a good retracement, more than a 500-point retracement for the Nifty. I think that seems to be now indicated that the corrective wave is now out. And I think we should get back into that primary trend, which is on the upside. So, something which started off for the month of October, where the index moved up higher from 24,500 mark towards 26,000 plus levels. And then in the last 7 days, we've seen a correction of sorts. So I believe that the primary trend is still on the upside, and we could be looking at the index resurfacing back into an bull trading on a bull side mode. So I think over the next couple of days, or maybe a good part of this week, we should be looking at a bias which is on the upside. Interesting bit is that the markets are seeing some flux in terms of open interest changes. We're not seeing any major directional side in terms of the OI bent. So, one of days you see the open interest dropping down and the index, showing signs of cool off. And then the other day we see the index, the open interest rising up and the index being, a little flat as such, like what we saw on, Friday. So I think in that sense, I would probably expect the markets to remain in that kind of a flux in terms of positioning, but the direction still seems to be on the upside. Very near-term support for the Nifty is at 25,200 levels. So holding, if the Nifty holds on to this support level, we could be looking at the risk reward being a lot more positive and attractive at current levels.
Okay, so that's on Nifty. But Kunal, last week, all the heavy lifting for the street, whatever retracement that you've just spoken about, was done by the banking group of stocks, both PSUs and private. You expect that run that the banking space has seen to continue? Yeah,
so I think largely that trend will continue. And, so previous week we were thinking that maybe there could be some fatigue which could come back into the banking names, but the kind of movement and the momentum which we saw on Friday indicates that the major juice is still not out from the banking index, and we could be looking at further stocks trying to come back into a breakout mode. So we've already seen the PSU banking names doing phenomenally well. I now sense that many of the private sector banking stocks which have been huge underperformers and have been left behind by a decent margin both in terms of time as well as price comparison, I think they could start to make a comeback. So the risk reward starts to look a little bit more better. That would help the mix of the Bank Nifty to be a lot more constant and stronger than what it has been over the last few weeks. So I sense that we could be looking at a further up move for the banking index, and add to the fact the financial services pocket, the entire NBFC stroke HFC names.
And we spoke about Trent, Kunal. Where does that one sit?
So, I think after a correction from 8,200, 300 levels towards 4,200, 300 where the stock is trading right now, maybe the major part of the pain seems to be out. There could be residual correction which could happen to the stock price. You can't really preempt a major support or a bottom level as such. But I believe that after a more than a 50%, 40%, 50% correction for the stock price in that sense, I would actually sense that now this could be a good time where traders could start looking at more of a contra buy. So my belief is that say round figure mark closer to 4,000 odd levels, 4,000, 4,300 range could actually be a very good range to go for a contra buy on Trent.
Okay, so those are the levels that you're spotting for. But Kunal, before we slip into a very short break, help us understand your stock picks for the day. What's looking good amid a market like this?
So my strategy is to go contra, and I'll pick up 2 buy calls, and both of them are large cap names which have been huge underperformers. The first is the one HUL, Hindustan Unilever. The stock has been a drag over the last few months, but many of the data points, the trend line supports, moving averages, etc., indicate that the stock is entering into a very strong risk reward territory over here. So would go for a buy with a near-term target of 25.20 and stop loss to be kept at 23.60. And in the similar vein, would look at a buy on ICICI Bank. That's a stock which has been a huge underperformer in the private sector banking names. But yet again, the risk reward starts to look very attractive at this 1340 levels where the stock closed on Friday. So would look out for 1410 as an immediate target. Stop us at 1310.
All right. What